We're going to go over how Ethereum has performed over the past several years and our projections for both near-term and longer-term potential rallies. Go ahead and share my screen to display what we have here. So if you have not watched any of my videos before, I am a user of TradingView, which is a cloud-based software to help you track your financial assets, securities, etc. There's some notes I have in here as well. It's been working pretty well for me. It's got all the tools I need so far. And this is where I'll show you what the big picture looks like. What we're looking at here is a chart on Ethereum USD. And obviously a lot of clutter here, a lot of charts, extensions, things like that. I will walk you through what we got here in just a second. But as with any Elliott Wave analysis, you need to start with the big picture. And our big picture is very bullish. Been following cryptos, whether it's Ethereum or any of the other cryptos such as Bitcoin or Litecoin or anything else. We've had a pretty nice renaissance in the cryptos after a kind of a scary correction over the past few months. Just to show you what this looks like, I'm going to show some of the recent history. So this is actually a view of the current rally. We had a bottom. As a matter of fact, we've had like 3 or 4 bottoms, really. You can pick any of these as the actual bottom. But I'm going to call the official bottom the one we had July 20th. And ever since July 20th, we've been skying. So it's looking pretty good. Right around $3,100 Ethereum at the current time. If you look further back, we had a peak back in May 2021, around what, $4,300, $4,400, and pretty nasty crash since. Hope you didn't buy at the top. If you did, don't worry, just be patient, it'll come back. I know I have some of, I did some buys a little higher up. I'm expecting a higher extension than we got. Didn't quite happen. But anyway, bigger picture, that rally was the culmination of a much bigger rally that started in March of 2020, which I'm displaying here. We had a bottom way back here. And again, if you have been following the markets, that coincided with an overall swoon in the market. We had equities and all sorts of assets across the board crash violently. And cryptos were no exception. As I like to mention, bonds rallied, but that was like the only thing that did. Whether or not the Fed had something to do with that, up to your perspective. But we had a bottom in Ethereum right around what, $80 or $100. Could zoom up a bit, but we also had a rally further back in history. Ethereum was not as well known back at this time. If you guys remember, there was a colossal Bitcoin rally end of 2017. Bitcoin hit $19,000, exponential parabolic growth. And then we had an epic collapse, which led people to declare cryptocurrencies dead. While behind the scenes, quietly, Ethereum also had a rally, just as violent. And yeah, it topped around what was about $1,500, $600. So to make this useful for us from an Elliott Wave's perspective, I'm going to switch this to the logarithmic view. Go ahead and auto scale it. And I might switch to the, actually the daily view does contain the entire history of Bitcoin. So as I alluded earlier, I'll look at the big picture, the macro picture, just to see what our rally structure has looked like up to this point. Once you get the macros down, you get a better idea of what part of the cycle you're in. Are you in a bullish phase? Are you in an impulse? Are you in a corrective cycle? All those things. With that information, it helps you make better short-term decisions as well, and you can get higher probability micro setups based on the macro setup. So if you look at it this way, I'm going to go ahead and use our Fib extension tool. Our history starts way back here, 2015, 2016. If I apply the Fib extension tool here, I'm going to go ahead and extend it all the way out just to show what we have here. We have a classic 61%-ish retrace. If we assume this is the wave 1 here, you've got what appears to be a pretty good blow off here. So if you look at the subwaves, you have a 1 here, 2 here, and then typically you expect the third wave to be around the 1.38 to 1.618, 1.618% extension. So looking at this, we had a 61% retrace followed by a third wave that just narrowly missed the 138% extension. From that point on, you expect something to either hit the 1.764 or the 2.0 extension. However, as I've mentioned before in other discussions, that cryptos trade just like commodities. So it's free, typically your third wave is the strongest wave in an Elliott Wave impulse structure, generally speaking. But in commodities, often the fifth wave is as strong, if not stronger, than the third wave. And we actually see an example of that here, where Ethereum actually went past the 238% extension. And I'm actually going to add one more extension here just to demonstrate exactly how far we got. I'm going to make this 2.618, which is a common standard Fibonacci. And as a matter of fact, it went even further than that. So anyhow, I'm considering this a wave one here. I'm just going to label it. So that was an epic blow off top. Pretty big. Everyone was aware of it, at least people in the know. Had a colossal pullback. So I'm going to take my Fibonacci tool and I'm going to apply it here. So from our bottom, I'm going to keep that as our anchor. That's 0.0, just for consistency's sake. We had a rally all the way up to that number you see there, wave one. And then we had a subsequent pullback, which I'm going to call wave two. Now, just like with Bitcoin, this is a kind of an unconventional wave two bottom. Typically, you expect a nice A, B, C, like a quick three-wave correction. So that's how corrective waves operate. They're three-wave structures. And typically your C wave goes further down than your A wave. However, due to other analyses, other factors, we've determined that, at least I have decided that our wave two actually ends here. I consider this drop off in 2020 to be the actual C wave, with all this being the A wave. A lot of technicalities as to why, but other cryptos do show that this would more appropriately be a two wave. It's an exception, not the rule. It happens. So with that being the two wave, so that's the correction, we got ourselves a nice basis to calculate our big picture. Now I'm saying 1, 2. Again, I'm going to demonstrate how this is an iterative process. Right now, I'm assuming that's a 1, 2. If that's the case, in classic Fibonacci pinball fashion, you'd expect your first wave to make it to the 38.2% extension, followed by a correction back to the 23.6, maybe lower, maybe you have a deep correction. And then your next rally target would be at the 100% extension. Well, if you're looking carefully at my screen, there's some pretty absurd numbers here, and it's not realistic. So the correction I'm gonna make here is that this is actually not a 1, 2. I'm actually considering this a 3. So this is actually a third wave. You had a 1, 2, 3, 4, 5, however you want to count it. And this is really a fourth wave extension here, or I'm sorry, a fourth wave retrace. So that's more realistic. You typically expect a fourth wave to be a relatively shallow. And when I say that, if you look at the actual proportions, it's not that deep of a retrace, not even 38%, which is typical. From third wave all the way down to the end of the fourth wave, you typically expect a pretty shallow, but very drawn out, slow, painful correction. It takes forever and it drains you. It's just mentally testing. With that being said, if this is the fourth wave, we have some Fibonacci equivalences that tell us where we're going to hit once we rally into our fifth wave. So if you look at the structures I got over here, some of the numbers you target are either the 38% extension, the 50%, or the 61.8% extension of the overall third and fourth wave. That places targets at 3,100. Well, if that's the case, we already hit our rally. This would be the wave 5 peak, and you'd expect a pretty nasty pullback subsequent to that. I'm going to tell you, we're not out of the woods yet. This could still happen. So this is what I'm going to call the alternate situation, where we had a nice rally. This pullback we've had this year is an A wave. We're having a fake rally, a fake out bull trap B wave. It's going to be followed by a nasty C wave that destroys everything. So that's an alternate pattern that we must keep in the back of our minds until we exceed the previous top in impulsive fashion. And there's a couple other Fibonacci resistances you must overcome in order to confirm that we're not going to go in that pattern. But for the sake of this little analysis here, we're going to take the bullish case, and we're going to look a little bit closer to the micro picture. So I'm going to go ahead and switch this to the 4-hour view. If we do that, we got a pretty nice view of what the rally, the more recent rally, has looked like. I'm going to zoom out just a bit, and I wish I could go a little bit further back in time. Well, we got our anchor point, so we can actually visualize a pretty clean rally structure here. So I'm going to start a Fibonacci extension from the baseline there all the way to what appears to be the top of the first wave. And of course, there's a shallow retrace. And we're going to try to look for any kind of Fibonacci, significant Fibonacci rallies, peaks, anything like that. So assuming that's our 1-2 structure there, again, typically you'd expect a couple of rallies. So 30.2% would be a subwave 1 that you'd expect. Looks like we have a subwave 1 right here that hits that number. A nice little pullback there. Followed by that, you'd expect the 100% or the 1.0 to be your third of the third wave. And it actually, that's exactly what we saw here. We exceeded it just a bit, just as we'd exceeded the 38.2% extension just a bit. Followed by a retrace. Now there's this large, ugly spike down. I've actually done analyses, taking that into account. The results are there. You know, there's different patterns, but I suspect that I think I'm good omitting this piece of data. We're going to assume that the bottom of this fourth wave here, this mini fourth wave, is actually right around here at $1,300. From there, once you hit the 1.0, your next extension will be the 138% extension. And looks like we hit it pretty good, if you ask me. We actually exceeded it, which is a pretty good sign. And another sign of the idea that you have to see an extension in the fifth wave of a commodity. So just to make sure we don't get lost, should have done this before, but I'm going to call this subwave 1. Actually going to use some symbology to distinguish it. Copy and paste that. So that's 1. That's the big wave 1. The big wave 2. And then I'm going to copy that, and we're going to show what the big wave 3 is. Oh, I'm sorry, this is the subwave 3. So before I do that, let me move this down to here. So this is actually our subwave 1 here, and I'm going to use Roman numerals, lowercase, just to make this more clear. So that is our first wave there. Going to have a wave 2 here. All right, and then we hit our 1.0. That is subwave 3. 1, 2, 3. A nice fourth wave pullback from there to here. All right, okay. And then finally, we have our epic rally blow off that we had earlier in the year. And I'm calling that bigger wave 3, subwave 5. Because remember, Elliott waves are fractal in nature. So this whole thing is subdivided into 5 waves. They also follow appropriate Fibonacci pinball proportions. That leaves us with about where we are now. We have just completed a bigger fourth wave. So what's after 4? 5. And our 5 will be bigger picture. It's also the final blow off. So I'm going to put a big 5 and a small 5 there as well. This final rally from our bottom of our fourth wave to our fifth wave will also be subdivided into a 5-wave structure that also follows these proportions, assuming that we have hit somewhere between 1.382 to 1.618. Typically, if your third wave hits 1.382, that extension, you expect a rally to the 1.764 extension. If it hits the 1.618, you expect it to go to the 200% extension. In this case, we exceeded the 1.32 extension. So we're really leaning more towards the $9,000 mark. So I'm going to place my fifth wave right there just for now. You're going to have this subdivide as well. Typically, your first wave is going to go up to the 130% retrace, or I'm sorry, extension. So short term, we're getting pretty close to that number. We should see a pullback pretty soon. You see a 5-wave structure developing here. If it blows past that, it might get to 4,800, the old all-time high, whatever it is. But right now, I'm assuming we're pretty close to a top in Ethereum. So this would be a sub wave 1 of this larger wave 5. Our third wave would typically hit 1.618 to the 1.764. So you should see a pretty violent rally once we have our wave 2 pullback. And while we're on this topic, I want to mention that that would be a good buying opportunity if you haven't gone in. So we'll touch on that again, but just putting that bug in your ear. Finally, you have your fifth wave at 9,000. So looking at the big picture again, I'm going to go to the 1-day view. All right, so if we look at it this way, as I mentioned, we have a 1-2 structure set up. I think the 2 is, no, that should have been a 2, so my apologies for any confusion there. We have a 1-2 structure right here, and that projects us to about $9,100, $9,200. I want to point out that, again, fifth wave extensions are very common in commodities. Ethereum and Bitcoin are no stranger to these. So it would not be surprising to see something higher, maybe the 223% extension, maybe 230%. We don't know. The other equivalents, the other extension pattern that we favor a lot in Elliott waves, once again, is you take your 3-4 wave structure, do the retrace to wherever that is, and you look at the 61% from there. I want to make sure I have this anchored properly. So let me get that there, just about at the bottom of Ethereum. When you do that, our 61% points at about $18,700. I'll let that soak in for a second. That's pretty strong equivalence. We have several different factors indicating the potential for a pretty epic rally in Ethereum. So I'm going to go over those things one more time. You have your 1-2 structure, which is projecting to at least $9,000, but we have reason to believe it could go higher because our third wave went relatively high, and fifth wave extensions are very common. So minimum $9,200 with strong resistance levels at 236, 2.382, 2.618. In addition, when you look at the overall 3-4, which is what this is, we have strong confluence there. We've got a lot of these levels coinciding. We got a $7,500-ish resistance here. 18.7 is a pretty strong confluence as well. You have another one at 11.8, a couple of those things. If you look at this big picture, again, lots of confluence right around there. And I'm going to keep pointing out there is a strong confluence right at that $9,200 mark. So point is, lots of reason to be bullish. So I'm actually going to shift to my analysis that I did earlier. That way I can stop making things up on the fly, be a little bit more coherent. So I have a huge box here where I project the targets to hit our fifth wave blow off top. And you can see some of these Fibonacci numbers being repeated. Some of the extensions look very familiar. So you'll see a lot of the same numbers here. There's a strong potential to get past $15,000. There's strong levels everywhere. We don't know exactly where it's going to go. We're going to cross that bridge when we get there. But do keep in mind, as promised earlier, we're in a sub-wave 1 of this fifth wave. This 1-2 will give us a much clearer picture of where the next target levels are going to be. So if you've been dollar cost averaging, or if you've been holding Ethereum, keep doing your thing. Don't panic buy, just keep doing your thing, keep buying a little bit at a time. If you have a lump sum that you want to put into Ethereum and maybe you've been holding on to it, not sure when to buy, I'd highly recommend waiting for a pullback. Like I said, we may already be done with our first subwave, and I'm going to turn this blue light filter off just to do that. Once it pulls back, we might get down to $2,500, maybe lower. There's also the probability, the potential that this rally structure breaks and everything crashes. So if you don't rush to buy now, you could get an even better opportunity later. And we'll have some support levels set up here to act as a, like a red light indicator as to when you should get out. But that would be a good time to put a lump sum, probably around, again, mid $2,000 range. Once you buy there, again, you can buy all at once. I recommend breaking that buy up, maybe buy once a week, divide your purchase into thirds, something like that. We should see a pretty epic rally. And again, the way that rally structure shapes out might be quick, might be parabolic, might have some consolidations there. we'll play those once we get that point. But right now, this is as far as we can know. So I hope make your decisions based on your own tolerance of risk, your own strategy, and for the longer term. Anyone who is interested in long term, this is going to be a major rally top. So if you look at the big picture, everything is based on the entire history of Ethereum so far. This is an epic blow off top. And what happens after epic blow off tops? Epic corrections. So don't get caught with your pants down. Again, we're not there yet. We'll cross that bridge when we get there. But once we get to this target box, it's time to start taking profits. And we may have a prolonged correction, could be multiple years. So we'll check that out. I'll keep updating as we go. But thank you for viewing, and I hope this was helpful.